Mastering Market Sentiment, Unlocking Profitable Stock Price Movements, 2023. Here are the lessons to be learned from this blog. 1. Influence of economic indicators on market sentiment. Macroeconomic indicators such as GDP growth, inflation rates, and employment statistics significantly affect investor sentiment by providing insights into the health and prospects of the Philippine economy. 2. Impact of corporate performance on investor behavior. Earnings reports, revenue projections, and corporate governance practices shape investor attitudes toward specific stocks and sectors, influencing buying and selling decisions. 3. Role of regulatory environment in shaping market sentiment. Changes in government policies, regulations, and fiscal measures, especially in sectors like banking and telecommunications, can alter investor confidence and market dynamics. 4. Global events' effect on local market sentiment. International developments, such as geopolitical tensions and global economic trends, can influence investor sentiment and risk appetite in the Philippine stock market. 5. Psychological factors driving investor decisions. Behavioral biases, herd mentality, and sentiment indicators like investor surveys and indices can lead to irrational investment decisions, affecting stock prices and market trends. Understanding market sentiment in the Philippine stock market. Market sentiment is a crucial factor influencing investor behavior, stock price movement, and overall market dynamics in the Philippines. It represents the collective emotions and attitudes of investors toward a particular stock or the market as a whole. Understanding market sentiment is essential for investors aiming to navigate the complexities of the Philippine stock market and seize profitable opportunities. This chapter introduces the role of market sentiment and its importance in shaping trading decisions. The relationship between market mood and stock prices is intricate, as sentiment-driven decisions can sometimes override fundamental valuations, leading to market fluctuations and trends. Key drivers of market sentiment. Several factors shape market sentiment in the Philippines. Economic indicators such as GDP growth, inflation rates, and employment statistics provide insights into the country's financial health and directly impact investor confidence. Corporate performance, including earnings reports, revenue projections, and governance practices, plays a vital role in shaping sentiment. Regulatory changes, especially in heavily controlled sectors like banking and telecommunications, can boost or dampen investor enthusiasm. Additionally, global events such as geopolitical tensions, economic slowdowns, and pandemics influence risk appetite, causing market fluctuations. These factors collectively create an ever-changing investment landscape that investors must closely monitor. The psychology behind market sentiment. Investor psychology plays a significant role in market sentiment, often leading to irrational trading behaviors. Behavioral biases such as herd mentality, confirmation bias, recency bias, and loss aversion impact investment decisions. Bullish sentiment arises when optimism dominates, leading to rising stock prices, while bearish sentiment spreads fear and pessimism, triggering sell-offs. Market volatility is frequently driven by emotional reactions to news and speculation. Sentiment indicators, including investor surveys and the Philippine Stock Exchange Index (PSCI), help gauge prevailing market mood. Understanding psychological influences allows investors to anticipate market trends and mitigate impulsive decision-making. Impact of market sentiment on investment strategies. Market sentiment significantly influences trading patterns and investment outcomes. Contrarian investors capitalize on extreme sentiment by buying undervalued stocks during market pessimism and selling overvalued assets in periods of excessive optimism. A long-term perspective, focusing on fundamentals rather than short-term sentiment shifts, ensures sustainable investment growth. Risk management strategies such as diversification, stop-loss orders, and asset allocation protect portfolios from sentiment-driven volatility. Investors who monitor sentiment indicators News trends and behavioral biases gain an informational edge, allowing them to make well-informed trading decisions while avoiding irrational market reactions. Navigating market sentiment for investment success. Successfully navigating market sentiment requires a disciplined investment approach. Investors must distinguish between temporary market swings and underlying business fundamentals to avoid being misled by emotional market reactions. Monitoring sentiment indicators and staying informed about economic trends help in predicting potential shifts in market mood. Awareness of behavioral biases ensures rational decision-making, reducing the risk of impulsive trades. By integrating sentiment analysis with sound investment principles, investors can strategically position themselves for long-term success in the Philippine stock market, capitalizing on opportunities while managing risks effectively in a dynamic and evolving financial landscape.